Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar maintained its bullish bias, recovering from intraday losses on Friday and ended up posting an engulfing candle, and from there could see further gains into the start of this busy week, with all eyes on the RBA, or the Reserve Bank of Australia's monetary policy meeting minutes on Tuesday, with the main attraction being the US non-farm payrolls data at the end of the week, which is expected to show an additional 189,000 jobs, down from the previous release of 272,000. The weaker US dollar, which fell from 106 down to around 105.70, followed the update from the US Bureau of Economic Analysis, or the BEE, after releasing the core personal consumption expenditure, or the PCE price index, which is the Fed's preferred inflation measure. The index remained unchanged last month after an unrevised 0.3% gain in April. Over the 12 months through to May, the PCE price index rose by 2.6%, slightly down from April's 2.7%, and significantly lower than the peak of 7.1% 2 years ago. So with an engulfing candle posted, we can see that the upside challenge should lead on to 67 cents, or around figure 45, where it has been heavily contested. If we do see a break beyond 67.45, then 68 cents should be on the card. Any weakness should find support around the level of 66.40, but with the engulfing candle should find good defense there, or where the 60-day moving average is, which is seen roughly around 65.94. The euro kickstarts the week on a front foot, following Friday's inflation update in the US. While all eyes will be on key economic data this week, mainly being the non-farm payrolls, we can see here that the market can rally on, I feel, with the technicals firming up towards 107.65.75, and with the objective holding at 108.30.40. Any pullback should find still good support around that key level of 106.70.75. The Japanese yen continues to face bearish pressure against the US dollar, extending into the new week, as the dollar bulls trade around the highs of 160. With no sign of any intervention from the Bank of Japan, traders should continue to be somewhat cautious. As we can see back here in April, it was very whipsawed and the market did drop significantly, and therefore could again see this pattern and look towards this trend line seen somewhere around 157.50.60. So as I mentioned, do trade accordingly to your risk management in case we get an unexpected visit from the Bank of Japan. Sterling, well, the market is potentially looking for a rally after the bullish divergence kicks in. Could see the market extend on towards the top side level around 127 to 128, but we do need to see the break of 126.65 to support the bullish case. Any pullback, well, the support I feel is likely to hold around that key level of 125.60.65. Having staged the recovery, the market is wavering a little bit when we look at spot gold around the area of 2,330. If we do see further bearishness, and with the technicals somewhat lackluster, could actually see at the start of this week, then I feel the move may be back towards the bottom side of 2,300, and with the broader call still holding around 2,250-270. Wrapping up with oil, the market stabbed at the top side level of $82 a barrel, and from there still shows somewhat persistence in challenging the top side area, but I feel the market may find a little bit of heat from the bears and therefore look back towards the bottom side of the range around $79.70-75. A break there would give further scope to the downside to around $76. While high volatility is likely to be in the market, still be on your guard, and traders should adjust strategies according to their risk management in case we do see a break above 82 and lead on to $84 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.